Hello everyone, you're welcome. It's TechRiz here, and in this video we're going to be talking about putting it all together. So for this section, because this video is going to come in like, I think it's going to come in like 3 to 4 videos or so. So for this particular section, I'm going to be talking about liquidity sweeps and break of structures, right? So if you're actually very familiar with technical analysis, you should know that liquidity sweep actually happens when a wick of another candle, a preceding candle, takes liquidity off, a certain level or a previous candle, whichever one you know it as. So I've actually displayed it to what you can actually see here. I've displayed it to what you can actually see there, right? So that is what liquidity sweeps are. And then liquidity breaks simply happens when what the body of the preceding candle actually proceeds more than what proceeds and closes more than the body of the previous candle. So that's very simple, very, very simple. So I want us to actually move to something actually more complex and better, right? So there is this setup I actually got on Euro JPP. I'm going to be breaking it down. Sorry, on NZD rather. I'm going to be breaking this very, very clean setup, and it is one setup that I know that actually happens nearly almost every time in the market. And if you actually see something like this in the future, you can be able to replicate it with ease, right? You can be able to replicate it with ease. So how did I get this set up? So what did I do? I first went to the higher time frame. So I will have to, so you first go to the higher time frame and read what the market is actually doing. So let me clear all the drawings so I can actually start afresh. All right. So coming to the higher time frame to see what the market is actually doing, you can say the market is kind of forming higher highs and higher lows. What you essentially do as your uptrend. What you essentially know as your uptrend. Higher highs, higher lows. What you essentially know as your uptrend, right? So it is very, very clear. So nothing quite much to read from the higher time frame. Now, look at this. Look at what happened around this area. Let's focus on this area here. Right? Let's focus on this area here. So look at what happened around this area. Now, when the market is actually creating higher highs and higher lows, there is what happens. Structural breaks happen. That is, there should be break of structures, right? We expect break of structures to actually occur, right? We expect break of structures to occur. And break of structures, actually, you can take them aggressively, you can take them more concisely. Now, if you want to take break of structures aggressively, that means you're actually looking for when the wicks, that's the preceding candle's wick, closes above the previous candle level. But I don't actually take that, right? Now, actually, you can see what happened here. The market actually came, created a higher low, a higher high. Then the market created another higher low. The market is essentially supposed to close above this high with the body of a candle. Supposed to close above this high to continue it towards the trend. But you can see what the market did. The market just swept liquidity off this previous candle, swept liquidity off it, and then started, receding. Sorry for the grammar. Started receding. So, this is all we could actually see from the 1 week time frame. So let's go to the daily and then see. The story becomes very interesting if you actually treat all of this like a story. It just becomes very, very interesting. So I had got this set up earlier before now, but I actually just want to show you something. So now you can see that yes, our daily time frame bias actually lines up with our higher time frame bias, and you can see that the market did not break structure. Instead, the market did cleared liquidity. This high that was supposed to break structure cleared liquidity, right? Took liquidity off this particular level. So we can actually mark this out. You can see that it closed with a week and then receded back, right? So then the market actually took out, also cleared liquidity from this low. Took out liquidity from this low. Internal range liquidity. There was a shift in structure. The market actually shifted structure. Why? By closing the body of this candle now closed below this low, which gives us our confirmation for a short. So let's move to the 4-hour time frame, and then we could actually see something very interesting. Just hope my network does not go off whilst recording this video. Okay. All right, so kind of like had network issues there. So you can see that the market actually did what? There was a shift here. The market actually broke this low, kind of like signaling what? A downtrend movement. So can mark this particular place as our break of low, right? So our break of low. Now, most persons would actually see something very, very familiar here. Now, when market actually broke this low, market actually came down here and then stopped at this point. So we could actually just mark here. All right. So sorry for the pause, guys. I actually had some network interruptions. So we could actually see that now price was changed, its trend. Price has changed structure, right? So, the normal SMC trader is going to expect that price should come up to the other block here, and then possibly we are going to be targeting this area. We're going to be targeting this area as our take profits, right? Targeting this area as our targets. So that being said, so we are going to look at this particular place. I think I'll come down to the 1-hour time frame to show you something. I talked about inducement the other day, and I said an inducement is not valid except it has taken a particular level, right? Unless it has taken a particular level. And you can see this particular place now. If we are to consider here as our order block, right? If we are to consider here as our order block, right? You can see that this particular inducement now, has taken off a previous level, which is this level here. So we could actually consider that as what our valid inducement, just because this particular level has been taken off by the inducement. So that's a valid inducement to our order block, right? So, or you can actually treat it this way, where you just take the trade on the inducement, like I taught you guys, inducement entry, where you just enter on top of the inducement, right? So just take the trade on top of the inducement. Now, this was how I actually framed this trade. So I marked out the inducements. And then if you're going to actually short from that particular inducement level, now your position should be something like this, where your entry is on the inducement line, your target is on this particular level or before it, whichever one, right? And then your SL is above this high. Your SL is above this particular high, because this particular high is the what? That is external range liquidity, right? That particular high is the what? External range liquidity. So, but because people actually like to ask lots of questions, if you actually see the charts when I actually sent it, I did not leave it like this, because if I had left this chart like this, some persons would have not even taken it serious, or would have not even entered the trade, because they'll be like, what sort of entry is this? But so what I just did was that to just avoid every form of confusion, you can just simply add a block. Can simply add a block there. So people take it as what, as another block, and you can see how very clean, you can see how very nice this played out, right? You can see how very nice this played out. So coming to the re-entry that I got on the lower time frame, how did I frame it? Very easy setups, very easy setups, really. Very easy setups. Very easy setups. So this particular one, now I could actually take this particular place as my other block, right? And then I could take this place as my inducements. People are too noisy, for real. And then SL will be most likely above this particular level here, because there's no level we could actually be. Now, one of the things about SL is that if you actually want to make money, you have to put your SLs at an invalidation zone. And invalidation zones actually lie above a certain area of liquidity. So this particular place now, since that my other block covers this particular area, I cannot just come and place my SL on top of this area, right? If I do that, I would be taken out immediately, because you can see that some persons will put their SL like this on top of the other block. Can you see how very easy it is for the market to like take you out? But if your SLs are placed above invalidation zones, like let's say this particular place now is a level, this particular place is another block, right? This particular place now, let's just say is a level of interest. If your SLs are slightly above there, or just say on top of it, something like this, right? You would have no problem on your trades at all, because when the market actually comes to your entry, the market actually plays around your entry and then boom, starts going your way without even nearing your SL. And at the end of the day, you're making money because you're not looking for a tight stop loss. So this was how this trade actually was framed. It's a very easy setup, extremely very easy. Now, you should actually note what are two things that we actually took place here that actually was noted here. Firstly, there was a liquidity sweep on the higher time frame. Market took out a level or a low and closed below it with a body, and the market came back to take orders from here, and then boom. And if you actually read the trade on the X100 Lengran, I taught you guys 3 things to actually expect when the market is about to change trend. Now, when the market is about to change trend, either there is a weakening in price, either there is a weakening in price movement, number 1, or there is a shift in price movement, number 2, or there is what is the final one? There is an expansion, a very crazy impulse or an expansion in price movements to a different area. So if you do not understand that, you can actually go back to that trade and read it. It's on the X100 Lengran, it's on the highlights. Go and read that trade. It is very important to understand the narrative of the market to know actually what you're doing, and to also be on the right place and on the right side. So this particular trade, this particular video, we've come to the end of it. In the next video, I'll show you another another quick one I got with USD CAD, right? Or USD CHF with just impulse. So with this, I have come to the end of this video. I'll see you guys in the next one. Hello guys, yeah, welcome back. So this was another very quick setup that I took, or that I caught and traded actually. And I'm going to be showing you the whole ideology behind it. And it is a very easy one, trust me. Like, you don't even need to think so much about it. You just need to understand something. Now, I don't know if you've possibly heard in some of my trades where I said, when you see an expansion, you don't expect the market to sell from the extreme again. Or, sorry, when you see an expansion, which is a very rapid impulse or a dead-low candle, like some persons know it, you don't expect the market to sell or buy from the extreme again. You start looking for closer ranges, right? So now let's say we have something like this, and then the market just rapidly sells like this. Like this, let's just imagine this is a dead-low candle, right? A very long candle. Now some persons will be looking to put their other blocks here, like targeting that particular zone is what's very, very wrong, because the market will not even come to that place. Although there are exceptions to this, because pairs like NAS and US 30 tend to like kind of like act out. Do you get? They tend to act out. So markets will not do this. Markets will not do this, right? Markets would not do this. So this is a big no, right? So when there is an expansion in price, you start to look for two things exactly. Either you start looking for breaker blocks or mitigation blocks, any of them. So we should be looking to take our trades from around any of this area and not the extreme anymore. There are cases where you start to look for entries from the extreme, right? And you could actually read that in a few trades that I've dropped. Although in this video, I'm going to also show you cases where you start looking to take your trades from the extreme. So this particular one is what some of you might know as what your breaker block, right? Some of you might know this as a breaker block, but when it occurs in this way, where market does something like this, and then market does something like this, right? And then boom, sells down very rapidly. You take what your trades from around this area, not this extreme, and we can actually call this one what mitigation blocks, right? Mitigation blocks after market has failed to swing. So this one was caught via a breaker block, a very easy one. In fact, just whether I call it a breaker block or a mitigation block, all those things are just terms. You just need to understand the concept that whenever I see you can see that this particular trade now was a very easy one. If I had taken this particular extreme as my point of interest, right? Some persons will be like, okay, market actually swept liquidity of this high, right? Market swept liquidity there. So we should be expecting price to come here and pick us, not knowing that a particular what impulse had already happened here, or expansion or manipulation, whichever one you like to call it, had already happened there. That particular place I'm highlighting with orange, right? Had already happened there, and then you're looking to take your trades from that particular place, right? It doesn't work. So that is actually one very, very crucial thing you should actually know. This was the same thing that happened in USD CAD, and I'm going to show you now. So how did I actually target? You can see that I took my targets from here, from this particular liquidity level here. You can see there's a liquidity pool around this place. So that's where I actually took my targets or my profits, anything you would like to call it. So some persons might be confused on how I got the entry. So this particular tool is called a gun box. This particular tool is called a gun box. This particular tool helps you precisely mark out 50% of the other block, and it also helps you identify your execution range. I think that is something we've not treated before. Execution range. When price has not gotten to your execution range, it is possibly advised to just wait until price gets to the premium or the execution range, as I like to call it, right? So this gun box is very, very important. It's a very necessary tool. If you don't have it, it looks like this. So this is the settings. I'll open my settings for you in case you want to set yours like my own. You can see possibly everything is just pink and peach and all that, right? You can actually customize your own the way you want it, but 0 mark should be left on, 0.5 mark should be left on, and then 1% should be left on. Or you can actually just change this thing to percentages, right? You can change them to percentages, right? So that is that. So I'll show you how I actually mark that out, because this gun box tool is very, 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 very essential when you're actually trading mitigation blocks and other blocks, mitigation and breaker blocks, because it can help you precisely mark out 50% of your other block, and then you can know where to actually take your trades from. So now, if you actually look here, now can see that these particular places, can see the market actually there was a sweep that happened here, right? And we can see this particular place. Now I have to clear one of these obstructions. So this is how I use my gun box. This is how I use my gun box, right? Now I actually do what? I actually take my gun box. Now this is the other block we're actually considering. This particular block. That is the block we are considering, right? That is the what? The block we are considering. So I take my gun box. If I actually want to get the most precise entry, right? Now, judging from valid order blocks, from one of my trades, I wrote this trade long ago. I told you guys that the order block must take liquidity off pre-existing blocks, but you should actually start from the words. You should start from the sponsor candle and mark it down to the liquidity clearing candle. So if I get my gun box, I mark from above here, from the top of the order block, down to this liquidity clearing candle wick, right? And then I can actually draw my order block. So let's just assume this was not here. Let's assume this was not here. So now this is actually drawn perfectly. Take my gun box from the top of this black candle, the sponsor candle, down to the base of the liquidity clearing candle. To the base of the liquidity clearing candle. Then I have to mark out 50% of it, which is the premium. This is the premium level. I have to mark the discount level or the premium level, whichever one you like to call it. I have to mark out 50% of it, more like I'm refining, right? Because there's a theory that says price would always react to 50% of the order block, the breaker block, or the mitigation block, right? So when price has mitigated, it always reacts most times, although there are exceptions, nothing is ever 100%. It always reacts to 50% of the block. So that is why I always use, if you've actually seen most of my trades with breaker blocks or mitigation blocks, you always see this gun box very close, right? So take that and boom, you can see that was a very clean sniper. Price didn't even hesitate to actually sell. And if you leverage this on your MT4 or your MT5, you're in for like stupid money. You're in for a lot of money, trust me. If you leverage this properly with good risk, this is possibly like a 5-hour trade. If you risk $200 on this, very easy, because this trade actually took a day to play out. You should be making at least $1,000 in a day, which is 200 times 5. Here is not a risk management class. I would have done the calculation for you. Right, so that is how I actually framed this particular trade with an expansion. There are a lot of them. I've done multiple trades talking about this expansion type of trades. Then this USDCAD, I dropped it yesterday on my page, and I had most of you interact with it, right? And you can see that it's actually doing well. It's actually doing well. Right, so the same thing happened. I think I also dropped it on the group where I'm with Sarah and some of my other friends, and they were like, why did you take your trade from there? And I was like, I'm just considering just majorly the expansion. Now, because this expansion actually happened here, guys, I think I don't need that for anything. Okay, yeah. Now, because this expansion happened here, right? Now, look at this expansion. Look at this impulse for, what did I pick? Let me pick the other block, sorry. Because this expansion happened here, change this to impulse, this yellow. Because you can see the expansion correctly, yeah? Because the expansion happened here, right? Let me clear this. You've seen the setup, right? You've seen the setup because I'm about to delete it, right? I'm about to delete it, start afresh to show you how I actually framed this particular setup. Now, because the expansion happened there, I'm not looking to sell here again. I'm not looking for price to come to this particular level. I'm not looking for price to come towards this particular level before I could actually take my buy order. Because when the expansion happens, it just signals to me that any of the nearest blocks, the price would actually take, right? Any of the nearest blocks, and the nearest block is this particular one. And then you can see what is that candle there. I have signaled this a lot of times that this particular candle is a very important one. It's a very important one. This is the hammer, the inverted hammer, or the hammer. Any candle that is a pin bar. A pin bar is very, very important. So because this particular place, I will not be taking it because why? I have seen an impulse So this particular places was ruled out for me, cancelled, right? So now you can see price has what changed structure here. In fact, let's just mark here out. Let's mark here out. There's been a break of structure. There's been a break of structure. Now, this expansion, now this is a classic AMA setup. Accumulation, manipulation, and then advance, right? There's the other block I'm targeting above here, but until then. So we are targeting what? This internal range liquidity above here. That is where we are targeting, right? That is where we are targeting. So look at this setup and then you see something. Now let us proceed, right? Let's proceed. So what happened was that now this particular pair started receding down to pick orders. Now I would actually consider most likely consider this particular place, right, as my point of interest to enter, right? And you can see how price just respected that zone very, very carefully. Now, what did I tell you guys about Gambox? I think because I posted this particular pair on Twitter. That was why I did not actually use Gambox, because I didn't want anybody to ask me questions like, why did you use 50% and all that? But if it were to be on my MT4 and MT5, how I set the order was the 50% mark that I used, and it's triggered very, very cleanly, right? So if you get your Gambox, mark from the beginning of this pin bar to the end of the pin bar, right? You can see that it precisely gives me 50% of the premium place or the premium area there. So I just mark this particular place out, and then you can see that you even now have what? A lesser risk to reward, a higher risk to reward than you would have if you just marked out the entire pin bar, right? So this trade was also a very easy one. In fact, expansion trades are very easy ones. When I see expansion trades, I just know it's a day to make money, right? Because once I leverage appropriately, I'm in for a lot of cash that day. So we can just place our SL slightly below this candle. This particular impulse candle now serves as an invalidation zone for us, just because I would not want to see price go beyond, that level. So this particular impulse candle level serves as what? An invalidation zone for me. So I just place my SL slightly below it. And then I'm targeting the internal range liquidity, right above here, and boom, can see a very, very clean setup with not so much stress, not so much work, not so much thinking. So in the next video, I'll show you guys something else. I think we've talked about inducements, we've talked about liquidity, we've talked about expansions now and all that, right? How expansions can help you get very easy trades. Let's talk about something more interesting in the next one. Hello everyone, good morning and good day to you. It's TechRiz here, and in this video, which I think should be the last and the third video, we should be talking about, just something out of context, something that can actually help you, understand when the market wants to change trend, right? Now, I think from the thread I made on the X100 line ground, I said you need to look out for three things when the market wants to change trend. Number one is first, weakening in price momentum. You should see a weakening. So let's say this from here to this place. Sorry about that. Okay, let me start again. First one I said was weakening in price movements, right? So let's say now it takes this particular from here. This, let's say point A to point B, it is about 6%. Now you notice that when price actually wants to change trend, that momentum it uses to exceed or clear the previous external range liquidity would reduce. Let's say instead of breaking out and ascending or advancing up to this level, it can just come up just very tiny, something like this, boom, before breaking the range low, then coming back. Now when this happens, you expect price to come back to the extreme to pick orders, not come here. So when you see this type of thing, don't actually expect price to come here and pick orders. If you take your trades from here, you get stopped out. So you expect price to come around this place and boom, right? So This one is when price movement kind of like weakens. When price movement weakens, right? So it's accompanied with a liquidity sweep. It's accompanied with a liquidity sweep. Then it's also accompanied with an inducement, possibly agnostic here. An inducement will be somewhere here, right? Somewhere close to the entry. An inducement sponsoring what? Price movement. So that is that. Then the second one you should notice when there are expansions, right? Now expansions can come in two forms, like in the previous video, either in form of mitigation blocks or breaker blocks. So when you see expansions, let's say we have something like this, then boom, market just comes down straight, right? Now you expect market to come back to this particular level around this area to pick orders, and then boom. So this is a classic breaker block that you know. Market change structures also when there are expansions as well. And then the third one is when there is a failed swing, when there is a failure, because some person call it shift of market structure, when there is a failure to actually make the next swing. So we have that one, something like this. So instead of market coming up to clear this particular place, market comes below this place, right? And then just stops here, then breaks this low. Now we expect market to do what? To come back to this place, pick orders, and then boom. Of course, with all your trade criteria met, you can actually take this type of trade. It's not something you just see and then just take, right? So this one too. Then okay, this one now, this particular one can come in this form as well. It can come in a mitigation block form, but what differentiates it is when there is an expansion. Like I said, when there is an expansion in a failed swing, then you can treat it like a mitigation block. So when there's an expansion here, you just take your orders from anywhere here, and then boom, right? So I cannot show you everything here, but in the X100 link round, the video I made, if you cannot actually find the X100 link round, check the link on my bio. You're going to see it, right? Check the highlights. You should know what highlights are. Highlights are now on X. So I think with this video, I would have actually loved to show you all the examples, but it's going to be a very lengthy something. So I made all the examples, showed it on the charts on the X100 link round. So just go there and educate yourself. So this is Euro USD. I'm going to be showing you a few things here. So the market was previously in a very crazy downtrend from the higher time frame. Was in a very crazy downtrend from the higher time frame. You can see it. Okay, I need to clear this. You can see this downtrend, right? You can see this downtrend. Market was in a very crazy downtrend, right? So market actually changed structure here. You can see market actually took out this particular external high. So we should actually expect market to reverse, pick orders, and boom. And you can see what the market did already. So it is nothing new, but I want to show you what you can actually expect on the lower time frame in case you don't actually see this. So this is a very good trade. So this is more like a QML entry. This particular zone. Pick orders from there. Okay, then let's see. The other block is here. This is treating it like a QML, right? Very neat and precise entry, but that's not what I want us to talk about now, right? Okay, so let's go down to the lower time frame, 45 minutes, right? And then see the story the market is actually giving us on the lower time frame that we can actually expect to see, because you know that the higher time frame controls the lower time frame, but the lower time frame gives you information about what the higher time frame is about to do on a fractal scale to get. So well, this is lovely. So we can see, like, from the lower time frame, after this particular high was made, this high now, markets created a new low, right? This is now a higher low. Now this is a higher low because it is higher than this previous low. That is why it's called, I say higher low. This is a lower low because it's lower than this. You know, in a downtrend we see lower lows and lower highs, but in an uptrend we see higher lows and higher highs. Now this is a lower low because it is lower than this particular low. So this is a lower low, then market creates a new lower high. Now this lower high sponsors the creation of this low, right? Now this low actually comes and then sponsors the creation of this lower high, this particular place. I hope you're seeing it. Then you can see what market did. Then market is supposed to take out this particular range to create a new lower low, but see what happened. Market actually shifted or failed to failed to clear this low, shifted, and then boom, there was an expansion. So this is a very pretty story I want to see on a very good day. I took this trade here, I did, right? So now we've noted our expansion. Most persons who ICT students or other persons, they can actually take their trades from the FVG, because you can see if you're taking your trades from the FVG, it is very clear. It's very clear that you get into this trade, right? It's very clear. So that's if you're considering FVG. But if you're not considering FVG, if you're somebody like me, now most persons I know will start taking this other block, right? I can see what market did at that time. Market just ignored them. Can see what market did. Market totally just ignored them. Now they will say, okay, this is an inducement, but let's see, market did still come down. Market did not still come down to pick them, right? So just like what I told you guys about expansions, when you say expansion, start expecting price to pick from anywhere around the expansion if there are any other blocks there. Now we could actually treat this particular place, we could actually treat it like, okay, now I can take here to be my inducement. Let's say I want to take this trade via inducement entry. I'll just take here to be an inducement, a very valid inducement, right? And then if I'm going to enter this trade, this particular trade, rather, enter on the inducement, target this particular range, this particular internal range liquidity, this particular internal range liquidity would be my targets. Okay, be my targets. Target the internal range liquidity, right? And then my SL obviously be below the gap, right? Obviously below the gap. That is where I'm going to place my SL, obviously below the gap. So I think I need to set this as a preset, right? Save drawing template as SL. Save. It will be obviously below the gap, so you have something like this. Alright, so you can see this is a very easy 6.5 RR trade. Very easy 6.5 RR trade. Extremely easy. Now, but let's say you want to actually treat it like all I have been saying. If you want to treat it like a block, right? Now I can actually see a breaker block. A breaker block, because this particular high, this particular zone now is supposed to sponsor, the creation of a new lower high, and then all that. But you can see what market did. This particular place, this zone ended here, right? This next, because we said this low sponsored this high. You can see that high did not mitigate the block. So we can actually, that high now can actually still be called an inducement, right? Now you can see what market did. These people have on their gen. Market then raided this level. By raiding, that's the impulse. Market raided this level and then continued, right? Market raided this level. So I can actually take this particular place to be a very valid block. I can actually place my trades from, and with the help of my best friend, the Gambox, I can actually refine and pick 50% of the block, right? Markets would always mitigate up to 50% of the block, right? And so you can see, voila, a very easy trade. Now once you've actually done this, you don't need to start placing your SL below as you're considering a block, you don't need to place your SL below any gap again. You need to place just need to place your SL slightly below the other block, and then I think this should give you a higher or a better RR trade, right? A higher or a better RR trade. So let's see. Yeah. So this is what 8.7 hour. 8.7 hour. If you leverage this on, your MT4, your MT5, XNext, or whichever broker, or on your prop firms, you should be in for like crazy amount of money, stupid cash, right? So I think we'll be going. Let me show you the one on the uptrend. The one on the uptrend. Let me show you. I think when the market actually was about to change trend to a downtrend. Let's go. Forgive me guys, my network is actually very, very poor since, in fact, it's school, since I actually am in school. I've not traveled home yet. Okay, so we can actually see a very interesting thing here. Now we need to actually note some zones. Now the market actually came from this particular level, created, in fact, the market actually wait, I think this is very confusing. Now remember what we actually said in our uptrend and our downtrend. The market will create highs and will create lows, right? Market will create highs and will create lows. Now any high the market creates needs to be higher than any level before it. So I can't consider this particular place as my high because this particular high here is higher than them. If I consider this particular place as my high, then I can actually just equally treat this particular place now as a liquidity sweep, and then I get caught up. So this is my high, this is my low, right? Oh, network has started misbehaving. This is my low, right? This is my next high. Now this next high sponsored the creation of this high, right? This low, sorry. Now this low here sponsored the creation of this particular high, but this particular high is meant to actually clear liquidity off this particular high, but it failed to do that. It just came here, failed to swing above, and then boom, came down to create this low, right? So I can start to mark out all the highs and all the lows, but I don't want to waste our time here. Let me just mark out the ones we are working with. I think mark out all the ones we are working with. Sorry guys. So that low now let's see what happens. Where should we actually place our other blocks from? Market has actually mitigated this level. If you go down the lower time frame, you're going to see that's the level. Now market has also mitigated this particular level, so it's kind of like invalid to us. Now market also, this particular zone, markets, mind you, the market has not really cleared, market has not really changed structure to me that I want to see. And before I can actually short, I want to see markets actually take this particular low, right? And markets did actually, markets took that low, right? So but scalpers or lower time frame traders must have really capitalized on lots of moves here and would have been expecting the market to change or dump long ago before even the high time frame traders get to see it, right? So but you can actually be flexible and can actually do all. Don't limit yourself. So market has also mitigated this particular zone. You can see that, right? Market has mitigated this particular zone. So all these zones above now are being mitigated. So I can't even consider them as, a place to enter. Although trading is very funny because sometimes market still comes back to zones that you feel or you expect are mitigated. That's why I like to tell people or my students this: nothing is ever 100%. Just treat it with what you know. Don't expect it to always be perfect as it has, as you've seen or whatnot, right? So I should actually expect this zone now to hold. right? This particular order block now to hold, as it has not been mitigated before. And you can see what happened. You can see even there's an inducement very close to it. An inducement very close to it. So, right? So you can see that zone actually was played out beautifully and then dumped. If you actually targeted this particular range low, this particular liquidity, let's say you take it as your target, let's see how many RR you can actually make. Although if you're actually a person or a trader who sticks to your trade plan, you can, like me, I trade majorly 1:5. Even if my trade is above 1:5, I trade 1:5. Once that's gone to 1:5 RR, I just close the trade. So you can see how very clean this setup is. This is a 5 RR setup. This is a 5 RR setup. A very easy 5 RR setup. 5.89 RR setup. Leverage this on your prop firms, your broker, or your MT4 and MT5. You should be in for stupid money. So with that, we've come to the end of this video. Do well to share to your friends, do well to follow, do well to repost, so that other persons can actually get to understand this concept if they're still confused about it. And if there are questions you have, concerns you have, you can ask them in the comments. I'll be going through them to answer them specifically to meet your needs or your demands. So with that, we've come to the end of today's video. Like, repost, and follow Decrease. Follow me for more. Also follow X100 Lenground if you want to actually see threads and not video tutorials. If you want to see threads, if you cannot actually play videos like this because of Twitter restrictions and all that, follow me on X100 Lenground. The link is on my bio. Help me like and repost this. Let it reach every other person or every trader that actually needs this video. Thank you for actually watching till the end. Thank you for watching till this. If you actually stayed up to this time, you're actually my MVP. Thank you for staying. I'll see you guys in the next one.